All right, so let's dive into tokenized real estate. It's like a digital revolution in property ownership, where real estate assets are broken into small digital tokens that represent fractions of the asset.
Right. Yeah, it's fascinating. Instead of buying an entire property, you can own just a piece of it. This really opens up the market to small scale investors who before might have found real estate way too expensive.
Exactly. And what's cool is that this is all powered by blockchain technology. Think about it. Blockchain basically ensures that every transaction is immutable and transparent.
Yep.
That means once a token representing part of the property is recorded, it's there for good without anyone fiddling with the records.
So it's kind of like having a digital ledger that nobody can tamper with, right? And because of this, trust issues that normally plague real estate are significantly reduced.
Right? And even more, it streamlines the whole process. Traditionally, real estate has been a very illiquid asset with major capital commitments and snail paced transactions. Now, with tokenization, you break an asset, say worth $100,000, into tokens that might each represent
Yeah.
$1,000 of value. This makes transactions way more accessible and efficient.
I love that analogy. It's like slicing up a huge pie, and now even if you only want one piece, you can still enjoy the benefits of owning a portion. But I do wonder, how exactly do these digital tokens work in practice?
Good question. So these tokens are typically created through smart contracts, automated pieces of code that execute under specific conditions.
Exactly.
They not only track ownership, but also manage the rights and obligations tied to the property. For example, if a smart contract detects that rent has been paid, it can automatically update the distribution of profits among token holders.
Right? It's like having a personal accountant running on autopilot. But isn't the system relying largely on standards like ERC-721 tokens? The typical standard on Ethereum for NFTs?
Yes, exactly. By using ERC 721 tokens, which are designed with traceability in mind, each piece of digital real estate ownership gets a secure, unique identity on the blockchain. It's like each token being a mini deed that carries all the legal rights and the history of transactions.
Mm-hmm. Cool. So what are some of the standout benefits? Transparency and liquidity have been mentioned, but can you expand on that?
Sure thing. Thanks to blockchain's decentralized nature, every transaction is recorded in a way that's
Right.
permanent and visible. This means there's no need for a lot of middlemen and less risk of fraudulent activities. And then there's liquidity. Since you can trade these small tokens much like you trade shares or cryptocurrencies, it makes entering and exiting investments a lot faster compared to traditional real estate sales.
That makes a lot of sense. I mean, it's almost like turning a previously static asset into something you can actively trade like stocks. But I'm curious, aren't there limitations as well? Not everything is perfect, right?
Absolutely, there are limitations. For instance, let's talk about smart contract vulnerabilities. Even though blockchain is secure, smart contracts can have bugs or security loopholes. If these aren't properly audited, hackers could potentially exploit them and steal funds. And once that happens, you can't really reverse the damage.
Yeah, that's a big issue. It's like having a fortress with an invisible tiny crack that only the most determined intruders can exploit. And, oh, what about regulatory issues? I imagine that the entire legal framework isn't quite ready for digital real estate, right?
Correct. In fact, regulatory uncertainty is one of the significant
Yeah.
hurdles today. Many regulatory bodies and real estate professionals still struggle to understand the blockchain and tokenization concepts fully, which can lead to a lack of clear guidelines. And then there's the whole complex licensing requirement for platforms managing these tokenized assets. It's a maze of trials, tests, and compliance checks.
That makes sense. I get that the system is breaking traditional barriers, but it also introduces challenges that need to be addressed. And then there is the whole crypto tax framework, which is still playing catch up in many regions.
Exactly, the lack of a unified taxation system adds more uncertainty. With tokenized real estate, you're stepping into uncharted tax territory in many jurisdictions. But despite these challenges, the potential benefits like accessibility for small scale investors and improved liquidity are really exciting.
One thing I think is really transformative is how tokenization could democratize real estate investing. It's no longer just the domain of the wealthy. Ordinary people can now invest peanuts into high value properties through fractional ownership.
Yes, it allows for a free-flowing market. Instead of a rigid, centralized system with often cumbersome bureaucracies, you get decentralized decision-making. Each stakeholder kind of has a say, which theoretically should lead to a more balanced market.
Mm-hmm. I just have a small critique though. While the idea of fractional ownership sounds perfect, the reality might be a bit bumpy. What if there's a lack of liquidity in a real downturn? Doesn't that risk turning even these tokens into assets that are hard to sell?
That's a fair point. While the digital nature of tokenized assets indeed provides liquidity benefits, in a market downturn, there could still be liquidity issues. However, compared to traditional real estate markets, the swift turnover and ease of transferring tokens should, in theory, help mitigate that. It's a risk, but one that might be more manageable than with
Yeah.
whole property transactions.
And what about the types of properties being tokenized? I heard it's not just about apartments and commercial buildings, but even trophy assets like vineyards and iconic buildings stand a chance.
Oh, yes, indeed. The tokenization process is versatile. You can even fractionalize trophy assets, like a vineyard or a highly sought after building, thus making them accessible to a broader group of
Mm-hmm.
investors. This could, in turn, bring more capital into areas that were traditionally dominated by ultra rich investors.
It's kind of like turning a giant expensive painting into several smaller prints that everyone can buy a piece of, right?
Exactly. It's like um, democratizing art ownership. Only here it's real estate. And because the ownership details and transactions are managed via smart contracts, there's minimal human intervention, which also cuts down on counterparty risk.
Right, because fewer parties involved means fewer points of failure. And by the way, how does the smart contract actually ensure these fractional tokens are secure? Is it just encryption or something more?
Well, it's not just encryption, it's also the inherent structure of the blockchain, where every transaction is recorded and verified by a decentralized network. Each
Right.
smart contract is coded to follow specific rules, ensuring that once conditions are met, the contract executes automatically. But then, as we mentioned, those smart contracts need to be robust and thoroughly audited to avoid any vulnerabilities.
I see. So there's a whole layer of technical and legal oversight needed to really make this work safely. It's an evolving space that will definitely require collaboration between tech experts and regulators.
Absolutely. And speaking of evolution, as blockchain technology becomes more mainstream and regulators catch up with the innovations, we can expect these tokenized real estate platforms to mature. Privacy, security, and ease of transactions will only get better over time.
Yeah, that's really promising. I think the vision is revolutionary. If you can break down barriers and bring in more liquidity, it fundamentally alters how people invest in and manage real estate. But do you think the current regulatory climate will keep up with this rapid innovation?
It's a bit of a mixed bag. On one side, technology usually races ahead of
Mm-hmm.
regulation. So, while tokenized real estate is setting a new pace, regulatory frameworks are still playing catch up. In the interim, there's a period of uncertainty which might, well, make some investors cautious. However, as more success stories emerge and the benefits become evident, I believe regulators will gradually adapt.
Yeah, that makes sense. Sometimes innovation forces regulators to update their frameworks. And it's interesting because the article even touches on tax complexities, like cryptocurrency tax issues that are still undefined in many places.
Right, the tax implications are a real challenge and one we can't ignore. A decentralized system operating globally, yet taxed with varied local rules, creates a pretty complex scenario for both investors and platforms alike.
Correct. So, in summary, tokenized real estate is changing the game by making property ownership more accessible, transparent, and liquid through digital tokens and smart contracts. But at the same time, we need to be mindful of smart contract vulnerabilities, regulatory hurdles, and tax complexities.
Exactly. And it's all a bit like a double edged sword. The potential upside is enormous, democratizing a market once reserved for the elite and streamlining what used to be a clunky,
Yeah,
slow process. But the risks, especially if due diligence and security and regulatory clarity aren't met, must be carefully managed.
I really appreciate this conversation because it clarifies a lot of the nuances. For someone new to digital real estate ownership, these insights are invaluable. What do you think the future holds for tokenized real estate?
I think we're looking at um, a gradual but transformative shift in real estate. As technology matures and regulations catch up, tokenized real estate might begin to replace many traditional practices. It could lead to, like, a more dynamic and inclusive market that's accessible any time of day, thanks to blockchain's 24/7 operations.
Absolutely. And who knows, maybe soon we'll see entire real estate portfolios traded like stocks, with investors easily diversifying across residential, commercial, and even niche assets like vineyards or docks.
Exactly. It's a fascinating intersection of technology, finance, and real estate. Even if there are challenges now, such as licensing complexities and security issues, the tide seems to be turning, making the market more open and
Mhm.
efficient.
Well, it's been an engaging discussion, full of insights and a few thoughtful critiques. I'm optimistic that tokenized real estate will pave the road to a more inclusive future in property investment.
Totally. And it will be interesting to see how um, stakeholders from every level, investors, regulators, and tech experts, come together to steer this evolution forward. Thanks for a lively chat.
Thank you. And here's to the future of digital real estate ownership.